right, so here we are, recapping day number 3 in the simulator, and I got to point out right away that I already made this recap on Thursday, but on Thursday there was a pretty extreme lightning storm going on as I was making the recap, and I lost power for just a few seconds, but it was enough to turn my computer off. And so I lost all the progress that I had. I was just about to finish up the recap and I lost power, and as it turns out, I didn't have any kind of autosave feature turned on in my screen recorder, nor my editing software. So I ended up losing all that progress, and I was already in a bad mood that day, so I ended up just scrapping the whole idea, and I said, I'm just going to remake this on the weekend. So if you're wondering why my NASDAQ and New York top 20 lists are empty, why my trades window is empty, it's because I'm making this on Sunday the 29th. So before I get into my trades from the 26th, I just want to point out a couple of the things that I did think about taking on the 25th. Actually, the only thing I thought about taking on the 25th. Now, I ended up closing that day with 0 trades. It was completely flat. What we're looking at right now is a chart from GSI on that day, or a GHSI rather. And the play that I had thought about was getting short against a $1 risk line. So this thing curled up early in the morning, and I'm not going to get deep into this trade or why I was thinking it, but the only thing that I thought about was shorting it pretty heavily, probably 3,000 or 4,000 shares. And the main reason I didn't take it was because I didn't want to hold overnight. I didn't want to have to live through the long-term trade that I thought this would be. I wasn't really super convinced about the setup that I was thinking about taking. And it just, after studying my first 2 days on Monday and Tuesday, I thought, well, this just looks like something where I'm going to end up, taking a half-assed position that I'm not super convinced about. And that's exactly the type of thing I want to avoid right now, especially given that GHSI is a cheaper stock and the commissions will be relatively higher compared to, something in the $3 to $7 range. So basically, my day on Wednesday was just a case of, looking at the scanners, finding nothing I liked, and I spent my morning just chatting in the chat room that I use, which is Velocity Trading. The host there, Nick, he did execute what I thought was a fairly brilliant play on PHAS, where he shorted it very shortly after the bell and made 30 cents on a play that I never would have seen. I think it was brilliantly executed, but at the same time, first of all, I didn't have shares available to short that stock, but it also fit into the same category as GHSI, where it's not an A quality setup in my opinion. It's not something that I'm super comfortable with, and I just left everything alone. Like I said, I was pretty sloppy on Monday and Tuesday, and that's something I really wanted to clean up, and so I decided to just close the day with 0 trades. So coming into Thursday, I was still trying to play it pretty close to the vest. I really wanted to focus on bull flags and long patterns. I didn't really want to get involved to the short side, mostly because the amount of buying power that I could use is reduced compared to if I'm going long. If I'm going long, I had about $8,000 worth of buying power, but if I'm going short, it's cut in half. And so this is the stock that I found the most interesting that morning, which was RAD. And you can see here a very nice volume pattern developing on a rise from whatever it was there, 830 up into the just below $9. And I love this consolidation that I was seeing. I mean, it was on a bit of a faster time frame than I would prefer. This is a 1-minute chart. I would rather this pattern develop on a 5-minute chart. However, the volume pattern was great. It was moving a lot more than anything else in the market. And most importantly of all was the daily chart. I really like to have well-defined targets. And on the daily chart, you can see a double top pattern just below $10. And with very little else to worry about in the way of daily resistance, I was really liking this setup. I thought a price or a profit target just below $10 would be a super reasonable thing. And I wasn't 100% sure how I wanted to play it. As it turned out, I ended up just in and outing a couple of scalps. I'll talk about why I think that was wrong later on. But anyway, all this to say that my first entry here on RAD was I was looking to get in above 890 for an anticipatory break of $9. and I wanted the volume confirmation to be able to do that. And on the very next candle, I got it. You can see here, as after it was descending on the consolidation, it did spike back up again, and I punched the buy button at 890. I believe it was 250 shares. Yeah, 250 shares at 890, and problems happened right away at $9. I got kind of spooked a little bit. I saw in the level 2 that there was not really a lot of shares at $9, and yet in my time and sales window on the tape, I saw buying happening, very quickly, and to me that screamed, "Oh, there's a hidden seller at $9." And so I decided to just punch the sell key and get out at what I thought was going to be $8.99, and just let's take a step back and see what develops here before we get involved. Now, as it happened, the hidden sellers evaporated it just a fraction of a second before I hit the sell key. And so what ended up happening was it spiked up here up to 908, and my order that I thought I was trying to punch for $8.99 ended up being 905, which got filled instantly. So I got a 5-cent better fill than I had expected, which was definitely a nice surprise. So I'm going to spend a little less time on these next two trades. I just want to get through them and get to more important things later in the video. The run time's already getting a bit long, so I'm going to condense these and run through them pretty quickly. We're still looking right here at the 1 minute chart on RAD. As you can see, after my first trade, which was exited on this candle, it continued to run up and did it without a whole lot of a pullback. So what I was looking at here, you can't see it now, but on the level 2, there was a fairly big bid support area at 925, which you can see double bouncing off here and here. And what I was looking for my initial entry was the first 1 minute candle to make a new high. And after taking 250 shares at the first 1 minute candle to make a new high, I had intended to add above the resistance levels that were either on the daily or on the level 2 rather. And then again, pretty aggressively, the main area would have been the high of day break at 955, and my target going up would have been just below $10. On the very next candle, we did get that break of the previous high. However, I anticipated this a little bit too much. I took my entry at exactly 940. What I had intended to do was wait for the break of 940. So I just pulled the trigger a little bit too early. And instead of breaking through 940, the sellers at 940 held. And as you can see on the next candle, it caused the breakdown that went all the way back down to 912. Now, my initial stop of 925 was broken through pretty quickly. It flashed down all the way to 919. And that's when I gave it, I tried to pull the old give it a second and see if it bounces. And it didn't bounce fast enough for me. So my secondary stop at 915 got triggered. And that's where I exited my position. So I ended up losing 25 cents on 250 shares, which gave back about double the amount I had made on my profitable failed trade back over here. Now, even though I was annoyed by this loss that I took from 940 down to 915, it didn't really faze me. I wasn't emotionally affected by it. It was just kind of slight irritation, but that didn't break my focus. My focus had still been really on the 940 level, looking to get in above that level, especially after double bottoming once again at 912. On the other hand, I wasn't super confident about the situation that it was, making lower highs and lower lows. It was trending down, and I didn't really have a developed idea of how far it was going to go. So I really, really needed to see volume confirmation come back into the stock in order to get involved, and I wasn't really keen on taking an entry below 940. I really wanted to see the kind of price action that would lead to a break of high of day. Something I could feel really confident about. And I ended up getting it only a few minutes later on this very next candle, where you can see the gigantic volume spike, at least gigantic by comparison. I mean, the rest of the day, there was only one candle right here that was higher volume. So this to me screamed a lot of strength, and that is where I took my first entry of 250 shares. So the fill I got on those on this first candle here, breaking 940, was 250 shares at 943, And then just a few seconds later on the next candle, I anticipated the break of high of day, and I took another half position, which was 125 shares at exactly 950. Following the break of 950, however, I noticed a lot of ask offers come up out of nowhere, kind of, and they were fairly heavy, and I wasn't really expecting that. There was a lot of bid support as well. Coming in on the way up, people were, jamming bids in there, and to me it looked like in the 60s. I thought it might be an area where there'd be a tug of war. So long story short, my exits on this were at 957 and 964, selling half and half, and that happened on these two candles right here. Now you can see on the next few candles, I ended up getting proven right about my feelings about the bid and ask orders that were spread out between 955 and 970. And I wasn't 100% sure who was going to win. Obviously, we're never 100% sure. But I didn't want to see it retrace the move that I had added into. Whenever I add, I want to, take profit right away, and then if it continues to look strong and it continues to run, well then okay, I might continue adding, and I might hold the entire remainder of my position up until my full target. But in this case, I thought there was a possibility of reversal below 970, and that's why I decided to ditch the second half, thinking that I might get back in after this consolidation. And you can see, based on the volume at the bottom of the chart here, that the sentiment really did change within this area. And even though it did break through it and continue upwards towards just below $10, you can also see that the action was pretty choppy. Even if you don't have the time in sales or a level 2 to be looking at right now in this recap, there's a pretty stark contrast in this group of candles compared to earlier in the day, where it was more defined moves, more reasonable pullbacks, and just a lot cleaner action on my previous plays. So I mentioned earlier in the video that I wasn't super happy with the way that I traded this, and that is true. What we've been looking at is a 1-minute chart, and the reason I think that this trade wasn't executed very well, or these three trades rather weren't executed very well, is that they should have been all one trade. Now if we focus on this instead, which is the 5-minute chart, you can see that there's a really clean run up here, followed by a super textbook pullback, and even though it did break the low briefly of what I would have been using as my stop, I could have justified making this all one trade with an initial entry down here at 890, which was my entry on my first trade. I could have justified holding this all the way through, and even if I had, let's say, taken some off at the top of this candle and then added it back later, I think this really represents a hole in my approach, in that I'm not patient enough to really hold long term. And I'm going to illustrate that by opening up my my trade log right here. These are the three trades from the 26th. You can see that my hold time in this window here was 26 seconds on my first trade. My second trade, 58 seconds. And then my third trade, also 58 seconds. So I only had a total of less than 2.5 minutes on my three trades, whereas if I had held it the whole way through, I could have reduced commissions, which are a very big deal, and I could have potentially made more by holding more shares longer, and I didn't. And I think that's something that I really need to improve, not just in this account, but in all of my history. I am notorious for over trading, which you'll learn in the future is a reflection of my work history and my time in poker, where I'm used to being always in the action, and just it's also an extension of my personality, which is I always need to have something to challenge my brain. If I'm not learning, if I'm not improving the way that I think, and I'm not always involved in the action, and I don't have a lot of stimulation going on, I get bored and I get annoyed, and the results of that can be very dramatic sometimes. In this case, I got away with the green day. I'll show you my daily results here. This is the day we're looking at. So I ended up closing with $26.15 of profit, which is a return on equity of 1.3%. Now, if I make 1.3% every day of the year, I'm going to be laughing. I'm going to have a great career, and the money's going to be flowing. However, that's not always how it finishes. And I have a habit of overtrading myself into the negatives. I've had days before where, I'd be up $100 gross and I'm still having a red day because of the impact of commissions. And in this simulator, as I said in my setup, all my commissions are based on SureTrader fees, which are pretty much the most expensive fees in the business as far as I know. And the reason I'm using those is there's two reasons. Well, there's a lot of reasons, but the big two are that SureTrader or something like it is going to be something that I use when I go back to live, assuming that the simulator goes well. The second reason is I always think when you're learning something, you should always learn a harder version of it than what you're actually going to face once you get into the real world of whatever it is. I've taught a lot. The most teaching I've ever done is with poker dealing. And poker dealing is very similar to trading in the way that there's a lot of pressure on you at all times. And little mistakes can balloon into huge mistakes very quickly if you're not careful. And the way I teach poker is to make life hell for the dealer, whoever's learning how to be a dealer. And in trading, I think it's very important to do the same thing. And that's why I'm using this commission structure. And if you look, is this daily results? Yeah, daily results here. My gross P&L so far in this account, is $111.90. However, I've paid so far a total of almost $60 in commissions, as well as 73 cents in trade fees. Now, that cuts into my profit a lot, as you can see. It's well over 50% of my gross P&L is being deleted by commissions. So what the effect that's going to have on me later on, and the effect that I hope it has on you, is going to be you'll be used to very harsh conditions so that when you get into the real world, it's going to be a lot easier for you. Now, shortly after I closed my last trade on RAD on Thursday, I got pulled away from my desk pretty abruptly. I had a meeting to go to all of a sudden, and that took up a lot of my time. Now, when I got back was around noon, and that's when I noticed PRPO's move that I didn't end up touching. At that point, my internet was starting to act up again, and I had analyzed my trades on RAD and wasn't all that happy with them. And even though this thing had set up some really nice flags that I definitely would have jumped on if I had seen them, particularly this one right here at the bottom, the first move was the cleanest. That would have been perfect for my account goals right now. However, I missed it. And I was turned off a little bit by the way that it pulled back off of the highs from 347 all the way back down to 274. And to me, it looked like it could be cooked. And I decided to leave this alone for a variety of reasons. The main one being that with the way that the market has been behaving lately, I would rather just sit on the sidelines and see how this reacted. And then, if I jump in and it doesn't work out, then I could get hurt very badly by this. And I didn't want that to happen. But on the other hand, if it runs up, well, if this thing goes parabolic and it hits $10, then that's going to cause market-wide momentum, and that's going to open up a lot of opportunities that I'm going to be able to capitalize on when things are more stable on my end. So I wasn't too worried about missing out on this move on Thursday. I was a little bit upset to have predicted this breakout right here fairly well. I was watching it by this time, and I totally whiffed. I stuck to my plan of not trading it, but it did resolve very well. And for those of you who are familiar with this symbol, which I feel like is everybody who's ever traded, PRPO is a monster former runner. It goes on some insane tears. It has gone parabolic multiple times in the last couple of years, and it's a symbol that I have a really good history with, and I find it just resolves very well. It's been known to go on multi-day streaks a couple of times, and so my thinking going into Friday was, well, PRPO might be the trigger for a market-wide momentum shift. Even though it's Friday, the continuation, or the possibility of continuation on PRPO was very real. And that's what I ended up looking at mainly going into Friday.